The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, all our thoughts and prayers go out to the folks in Houston and Texas and every place else down there. Boy, that is a lot of water. I wouldn't be surprised if somebody had been building an ark during that time. We're going to have a very special guest at the break, folks. You know, we have our good friend Rich Anderson has contacts all over the world, and he's introduced us to Kyle Cooper of Houston Energy, and he is down in the Houston area. I gave him a call yesterday. His family is safe, but he's going to be on the show because that's his business. He knows all about this stuff. He'll tell us what's going on, but we're seeing a very muted response in the crude oil market, folks. You can notice crude oil is barely up on the day. Gasoline futures were up about 9% overnight, matching the high that we had on Friday, and then it's given back about 4% of that. So this market is not acting like this thing is going to be a long, drawn-out affair that we're going to be out of gasoline for a while. So I don't know what that means, but we'll have Kyle Cooper on at the break at 9:30. So if you have any questions, have them ready for him. It's 927 827. Time out, boys and girls. We have to have a quick. Okay, back to the program. 877-927-6648. If you have any questions for our program here or for Kyle Cooper, who will be our guest. The chart that I posted here first is a chart going back what's happening since the election. These are some of the markets and how they've moved. You see the major moves that we had in Mexico. And you'll see what happened to the U.S. dollar index during that time, which the U.S. dollar is continuing to go down. But that just gives you an idea of what's happening here in some of these markets. Now, one other chart that I think is interesting is if we take a look at the long-term aspects of what this bull market has done, compared to others. And I'll put this up here and take a look at it, and then we'll get back to a few of these markets that we'll take a look at here to cover. But this goes back to the 1920s. You'll see that one of the biggest bull markets that we ever had was, of course, the dot-com bubble. That lasted 10 years, from 1990 to 2000. That will not be exceeded in my lifetime for sure. But you'll see this one we're in now is equal to the one from 1949. 1956, and the one in 1932 to 1937, folks, that started on July the 8th of 1932 and went into 1937, 5 years. But remember, the Dow was only trading at 42 back in July of 1932, so that was just a huge bear market rally. However, the bottom was the 8th of July 1932. It did back off, and then it continued to go up. But the real bull market after the correction from 1929 started in 1932. So that was a pretty substantial bottom, of course. And then we've had these others, up through these areas. When I look at this chart, I can't believe that I've been trading through some of these things. I mean, it's just amazing. We never had stock indices during those times. And many of the times, we had very few commodities that were really interesting. Now, the gold and silver looks like they're certainly breaking out to the upside. This is I want to get a quick run up here in the gold just to show you this 4-hour chart of what we're looking at. When we were on the air Friday, we had that tremendous $20 break that stopped, right at the 78% retracement, and then since that time, we've started to move up. We're ready to take out these highs. As you can see, we're going to have a little bit of trouble, I think, between 1309 and 1322. 1322 is the 1.27 expansion of this move that we had from June through July, and it's also a 786 on the weekly. But what's interesting about this is that, since that July 8th low, we haven't had a major correction. All the corrections have been between $18 and $20. And so we're due for a major correction, but whether it's going to come or not, we're not sure. Now, silver is lagging badly. We still have not taken out the Fibonacci number of a week and a half ago of 1742 per ounce. We're trading around 1722 right now, but that's a heartbeat in silver. It can easily go through that without too much trouble. So that's what I'm watching here in the gold and the silver. Those of you that get my newsletter and my charts and stuff, you'll notice that the charts that I posted for the stock market are some of the most bearish I've seen in a very, very long time. I just wanted to bring up one that looks we'll put up the Dow Jones here, of course. We'll just take a quick look at it because we do watch this Bradley model. But if you'll look at this, you'll notice that the price that we're looking at as a minimum is that third gap down in the Dow Jones Industrials at 20,000. Well, I can't get all these numbers together. 20,270, and that means that we would be looking at roughly just about an 8% correction from where we are here. I think this market is built for a much bigger correction than 8%, but that's just my opinion. What happens in these next few days will certainly be quite interesting. Regarding the the Treasury bonds and Treasury notes, we have a huge divergence in those, folks. The notes held the area that it should have held. We didn't even take out the highs from the last 5 days, even though we did do that, in the Treasury bonds. What you have to worry about in the Treasury bonds, and this here again, this is my opinion, and opinions are, we know they're like armpits. But anyway, if you take a look at this Treasury bond on the 4-hour chart, we've taken out the highs of mid-August. We've never done that in the notes, and the notes are 6 times the open interest and volume that we have in the bonds. But if this thing starts to move, if for some reason stocks would back off in a very quick move, sort of cause a flight to quality scenario in Treasury bonds, we could easily get up to about 159. That would complete a 3-drive pattern over the last 5 months, and that would be spot on to a daily pattern. That would be the one that I would really pay attention to. Now, whether we do that or not, I'm not sure, because the notes, they're not acting that bullish. I mean, they didn't have the same scenario that we had in the, let's just put this up here and let you take a look at it, because this head and shoulders pattern that we have in the Treasury notes is still valid. That's what we're watching here. So, that's what I'm seeing. Now, whether that's going to mean very much or not, we have to wait and see if that's going to be the case or not. But that's what the notes look like. Those are looking very interesting to see if that is going to be the case. But we should be okay. That's what I'm looking at. I think that we've got a chance here, to do something really significant here in the market to the downside. If we're really strong today with the Dow up, say 100 points, 150 points, and the S&P up about 15, this is all wrong. But we'll wait and see. 877-927-6608.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were talking about the Treasury note market here. You'll notice that we do have that head and shoulders pattern. There are several ABCD patterns leading up to the right shoulder. You'll notice that we did not take last week's high out. And also on the Treasury bonds, we talked about the importance of that 156.22 level. I think the high was 156.23. So that still is in vogue. But like I mentioned, if it does pop to the upside, there's a chance that those bonds could make the 158, and 3/4 to 159 level without any trouble at all. This would be a 3-drive pattern in notes at that time that would take it up to the 128. That's one thing about pattern recognition, folks, is when you're looking at these patterns, you have to pay particular attention to when they fail, because when they when they fail, you just don't want to stand in front of them. There's just absolutely no reason to. And remember, there's no mistake in being wrong. The mistake is in staying wrong. And that's the one thing that you certainly, should not try to do as we do these things. And that's what stop protection is for. Because if you're not using a stop, you're basically telling the stock market or the foreign exchange market or cattle, whatever you're trading, you're basically saying, I know more than you do, and I have no fear of what you're doing. So that's a key thing, to pay attention to. Now, the next chart that I received from one of our listeners that brings us a lot of really good information, as most of you folks do, is a chart of the 200-day moving average of stocks that are above or below the 200-day moving average. And you'll notice we are sitting right on that line right now, and we're ready to break through it. Folks, the odds of the market going down substantially after going below the 200-day moving average, 23 of the 24 times that it has gone below the 200-day moving average, the market has gone down somewhere between 3 and 10%. So you see where we are here historically, and believe me, we have been saying this for quite some time. You'll notice that the rate of change of the 200-day moving average from 2010 has been going down. So it's only been a handful of stocks that's been running this thing, which we've been saying, the 15 of the 30 Dow stocks, the 20 or so stocks in the 100 NASDAQ, and then some of the others. The others are having a great deal of time, a great deal of trouble going up during this time. So that's a bad sign, at least technically, is what I was thinking. I think a perfect example of technical analysis is what we have going on here in the crude oil market today. Today we have the worst storm to hit the Gulf since I think they said 1979, and yet we don't even have crude oil hardly up on the day. Heating oil is up, marginally, and then the gasoline is up. But it barely took out Friday's highs. Now this news is known by everybody because it's on every single channel everywhere. And you would think with this type of news, someone in that business must know something. And we're going to have Kyle Cooper on here in about 9 minutes. Maybe he'll be able to, tell us some things. But when markets fail to react to really bullish news, that is not a good sign, boys and girls. We've seen this happen time and time again. We've seen it in gold and silver and soybeans and just about everything. A perfect example, March the 9th of 2009, the whole world was coming to an end. They were saving the big banks. They had to use Warren Buffett, to bail out Goldman Sachs. That was the best buying opportunity since 1982. And so just remember that the news follows the trend, and we'll see what happens. But the crude oil market is not responding to the news. Now, there's a caveat here, and that word is yet, Y-E-T, because this could change in a matter of minutes, and all of a sudden someone sees that they've made a mistake, and then they all pile on just like they did in gold the other day when we got down to the 1282 level, and then it reversed. And that was a huge move, folks, in gold. I'm changing the subject back and forth here because my mind is catching up to it one day at a time. But after we hit 1301, we dropped to 1281 very quickly. That was done on over 2,000 contracts, folks. That's 2 million ounces of gold. And they realized their mistake, and look what happened. It turned right around and went up. So these things can change very quickly. Remember, the other thing that's going on here is that we have Mercury is in retrograde motion, and that's when people have a tendency to make mistakes, and they also have a tendency, to do the wrong things for the wrong reasons. So remember that that's a very important. Ronald Reagan really believed in his wife did, believed in astrology quite a bit, and he wouldn't sign any major legislations during the Mercury retrograde period. But that's neither here nor there. Okay, we have a question from one of our listeners, and that is about the silver market and why is silver lagging the gold so badly. If you'll give me a second here, I'll put up this silver chart. We're trading at around 1723 this morning in silver, so you can see that we've still not taken out that high of last week that came in at the 1740 level, I believe. So that's an interesting one also. You can see the strength in the gold, versus the silver, but that's neither. And also the platinum, if you'll notice, platinum has been lagging very badly. Actually, with gold as strong as it was yesterday and Friday, you'll notice that the platinum market was even down on the day. I'm not sure what platinum is doing this morning, but it's had a hard time, and that's nothing more than an ABCD pattern that we just completed on platinum, and that was at a 382 level off the high of 2015. So I'm watching the gold, silver, and platinum very closely, because I believe long-term it's got some really great moves coming. But frankly, right now, I'm sure that there's probably something else going on. Even with this big run we had on Thursday and Friday, the open interest in silver did not change. There were no new buyers coming in. There were new buyers coming into the gold market, but none in silver, and platinum had a drop in open interest. So there was short covering, in the platinum market, and, it ended up being down. So that's another one that doesn't look real interesting. Now, here's the chart of the gasoline futures here on Sunday night. I just wanted to give you an idea. We'll have Kyle Cooper on here pretty soon here. By the way, if you want to call in, the number is 877-927-6648. I think I said 6608 the first time. It's 6648, 927-6648. And the prefix is 877. So we'll look at that, what is going. Someone's asking a question about silver and platinum putting money in the general market following its bell. I have no idea, Frank, if that's the case or not. I don't believe that the investors that are in the stock market are the same investors that are in gold and silver. They will maybe put some of it, but the traders, I don't think actually follow that. But I'm not sure of that. I have not seen a correlation in that, so I'm not the one to ask that question. But let's take a look here at this chart in the gasoline futures. As you can see, Sunday night, you'll notice what happened Friday, that actually was down about 10 cents from the high. And then last night, it went back and it took out the highs of March at the 1170, 177, 179 level. And then it backed off about 4% this morning. So we'll have Kyle Cooper on here of Houston Energy here in just a little bit. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our friend Kyle Cooper from Houston, Texas online. Kyle, are you there?
How you doing?
I'm doing okay. How are you doing? That's the main thing. I mean, you're in a... Have you built an ark yet? Have you started building an ark?
Just about. That's about right. This is definitely a historic event in terms of the total rainfall and the breadth of coverage.
Now, we see a lot of different things on the different news channels. Does it give a pretty good representation of what's really going on in Houston? It looks like the downtown area looks like the canals of Venice.
Yeah, I mean, they're certainly showing the worst portions. Houston has, just because of the topography, water drains into certain areas, and those areas always close and flood. I mean, a lot of times there's areas in Houston that can flood on a heavy dew. So certainly it's exaggerated, but I mean, this is bad. This is a historic event. We've had, by most accounts, over 2 feet of rain across most of the city since Friday afternoon. So it's bad. Clearly, the news is showing the very worst.
Okay, now, Kyle, one of the things, from my years of experience, and, you're a good friend of Rich Anderson also, but, I'm watching it, that the poor reaction that we're seeing in the crude oil market, considering that this is something that should be fundamental to supply-demand, shouldn't it?
Well, what you're seeing, obviously, is crude lower with gasoline and distillate higher, and that's a direct result of the refinery closures. There have been a number of refinery closures. Thus far, reports indicate that there hasn't been any real substantial, significant damage to the refineries. Thus, once the workers can get back to the refineries and they power back up, we should have supply again. But right now, this is strictly a function of the refineries are not consuming or processing the crude, and the gasoline and distillate aren't coming out of them. So that's why you're seeing such a dramatic impact on the gasoline and the distillate crack, that being the value between the refined products and the crude.
Well, that, sort of surprising, because I know crude is the basic product where they get this stuff from, and I was listening to the news early this morning on Bloomberg, and the gentleman was saying, well, he was expecting about a $2 a barrel rally in crude oil, and it's down on the day to day. So it's certainly having a muted response compared to what we're seeing. And gasoline is actually backed off a little bit from its early Sunday night high also. Is there any numbers on gasoline that would say that, this is a major problem, that we're going to be out of gasoline in certain areas for a month or two?
No, certainly what is, this is a horrific event, no doubt, but at least the U.S. has ample supplies of gasoline. We have right at 230 million barrels of gasoline in storage. While that's a little below last year, I believe off the top of my head, that's the second highest we've had at this time of year for decades. So the country as a whole certainly has a lot of gasoline already in storage, that as soon as the roadways open up, as soon as things calm down a little bit, we can transport gasoline from other areas of the country. And what you would certainly expect is that the EPA will probably grant some waivers and some other things to allow maybe a somewhat not as environmentally friendly gasoline to be moved around the country, just to alleviate true shortages.
Okay. Now, we've had a question for one of our listeners here, Kyle. The services that you folks have subscribed to, are they very similar to what we're seeing on, the major networks, where they're showing the patterns of these things coming in? And do they get a good idea of what they think the damage is going to be? And the second question that he has is, do they take advantage of this opportunity on hedging profits when the market's, aberrations get, out of whack?
Well, certainly the companies have the opportunity to hedge out forward. Honestly, nobody really knows quite yet the extent of any damage, because you just can't ascertain from kind of not being right there in the control room or such, as to whether or not water's penetrated and flooded some of the control rooms and some of the other electrical equipment that's required to run these refineries and such. So it honestly is just going to be a few days before people really know the extent of the damage when they return to the actual facilities.
Kyle, are you a Houston native?
Yes, I was born and raised here. So, this is definitely one of the worst that I've seen in my lifetime, and I've lived through quite a few of them. So it's historic, and there's definitely the Brazos River, which is a river that runs just west of Houston, is projected to probably crest at record levels here in the next couple of days, and that might exceed the previous record by a couple of feet.
Wow. One other question that I have is the George Bush Airport. Is it open or closed?
It's still closed. Honestly, that surprises me because as much water as we've had, the winds have not been horrific. And so I'm actually a little surprised that both airports, both Intercontinental and Hobby, are reportedly currently closed right now. I know they're just erring on the side of precaution, but it does seem like they've operated in actual worse conditions, certainly from a wind perspective, than they have right now. Because the winds have not been bad, even though we've had torrential rain. The winds have not been excessive at this point. Although there have been tornadoes that have spawned up, from spot to spot.
I cannot imagine that much rain, 3 feet of rain, 1 year of rain in 24 hours. Just as I just can't believe that. I don't think they haven't seen anything since biblical times to see that much rain. And
actually, Alvin, which is a city just to the southwest of Houston, holds the 24-hour rain record in the 48 states. Hawaii might have beaten us once or twice, but back in the early 70s, a tropical storm, a very slow-moving tropical storm, and that is similar to Harvey, dumped 43 inches of rain in 24 hours on the city of Alvin. So Texas has definitely seen a lot of rainfall in short amounts of time in our history.
Well, I know we were watching and we noticed that in 1900, the city of Galveston, the dam broke there during one of the hurricanes and it killed 6,000 people. So I'm sure our technology is a lot different now, but this is very scary. And it's amazing to me, Kyle, that so few people have lost their lives considering the extent of that water and how quickly it came. I mean, it's really.
Well, luckily, this was a relatively slow-moving storm, unlike the hurricane of 1900, which, of course, we didn't have the advance warning. But that one was similar in the sense that, Harvey was not considered that much of a big deal on, as late as Thursday. Even really Friday morning, it wasn't considered that significant. And it ramped up to a Cat 4 by landfall, so it accelerated very rapidly. The storm of 1900, actually, from an overall perspective, that's really what precipitated the shift from Galveston to Houston. The Galveston was actually the bustling, much bigger city in 1900 until, like you said, it really got obliterated. I believe that remains the largest and most significant natural disaster in American history was that Galveston 1900 hurricane.
Okay, let's have your view of crude oil. Just post Harvey, what do you think is going to happen with crude?
Well, the next couple of weeks, you're going to see a tremendous shift back and forth, and quite honestly, with just as refineries return to operation, as one refinery sends gasoline out, as another one takes crude in, what I do expect over the next couple of weeks.
Kyle, we got to take a break, my friend, and yep. I'll be back with you after the break. Okay?
Yep, no problem.
Thank you. Okay.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, back, folks, with Kyle Cooper out of Houston. Kyle, we got cut off a little bit because of the commercial. Could you give us your 10 cents worth of, well, it's called the platinum value of the of your what you're looking at in crude oil, please?
Yeah, it's a little more than 10 cents. It's actually down about 50 on crude with gasoline, like we talked about earlier, up almost 7 cents on gasoline. One of the things that, and as I mentioned before, as these refineries come back into operation, one reports one thing, and one refinery is reporting that they sent out a bunch of gasoline, indicating a draw. Another one shows some crude oil shipments coming in before the refinery actually started back up again. And I guess just what I'm saying is over the next couple of weeks, I do suspect that there could be some really big changes across the complex in terms of reported crude, gasoline, and distillate inventories. Also, one thing I noticed that most of the schools in Houston have already announced that they're closed entirely for this week. This is an area of about 6 million people where almost everybody drives. There's very little mass transit in Houston, and they've just been telling everybody to stay off the roads. While most of the roads are cleared, almost every road within a 5 to 6 mile stretch is probably going to have one area that's impassable. It's very difficult to get around the city just because in Houston, there's just low-lying areas that tend to flood. You can't get across that 20 to 30-foot stretch of ground because there's 2 or 3 foot of water right there. And even though 30 feet away from you it's clear, you can't get past it unless you got a boat. So I think there's also going to be some significant demand impact that probably maybe offset some of the supply loss that we're currently seeing.
Well, listen, we want to thank you for being on. One other question. Is there any charity that you would suggest that our folks here at TFNN would like to contact in Houston if they'd like to make a donation? Do you have anyone in common? Or if you don't, that's not a problem. But I know some folks that, might have a church or something that they like to back.
Any of the big local churches, I attend Memorial Drive United Methodist Church on Memorial. We're setting up relief centers for those who've been stranded or evacuated. Any of your local churches, synagogues, other mosques, as well as United Way, Salvation Army, Goodwill. I think all those in the Red Cross, they're all going to be active in trying to help out the people who've been displaced as a result of the storm. So I thank you for that thought.
Oh, listen, thank you very much, Kyle, and we'll have you on again soon, and may God bless, and may the peace be with you, my friend.
Yep. Thank you.
Okay.
And, it does look like it's shifting east, which is better for Houston. It does mean our neighbors to the east are probably going to suffer a little bit like what we have so far.
Oh, brother, that's not good. Okay, thanks for joining us, my friend. We really appreciate it.
Thank you. Have a great day.
You bet. Kyle Cooper
Okay.
of Houston, Texas, and his specialty, of course, is the energy markets. He does a lot of hedging and stuff. So anyway, we'll get back to these markets now. One of the things that I wanted to bring up to you is to show you what happened to crude oil last night. You'll notice that when it opened on Sunday night, it opened at 78% retracement of the high that we made back on August the 24th. And then since that time, we've come down and we've gone a little bit below the 78% retracement on the downside at 47.30. We're trading around 47.40 right now, I believe. So it's trying to find support here. But, like we were just chatting with Kyle Cooper, this market is not responding, but that doesn't mean it can't in the future, because once they find out the damage in some of these things, it might change very dramatically. So this is one of the reasons that, I try to do technical analysis, is because if you look to see what the charts are telling you, that's usually a pretty good indication that you're looking at something that could be, rather exciting. Because if we break that 47 level in crude, there's a dollar a barrel lower, there's another number down there that is important, because that would be an ABCD expansion of that move to the downside. Now, we haven't talked anything about the foreign currencies yet, folks, and we've had a pretty big breakout now in the euro. I want to post this up so you can see it. This is the 4-hour chart. You'll notice that we took out the highs of August the 4th. And last week we talked about the euro, because it stopped at the 382 retracement of that July low. It took 6 days to get down there. Actually, it took 8 days to get down there. And from that point, we've made new highs now, folks. If this is an ABCD structure on the euro versus the US dollar, we're looking at a potential $15 run from the 116 level. That would take us up to 131 in the euro. Now, that doesn't mean it can't go there, but that's what it could be. So the other alternative is that this last little ABCD swing that we had from the eclipse would take us up from the solar eclipse from the lunar eclipse to the solar eclipse, would take us up here to this 119.50 to 60 level and then stall. But that has not given us any indication. The only way this pattern would fail is a move back below the 117 level, and then that would say, yes, that was a false breakout. But until that time, don't put your money on something like that. That's not a good thing to do. If we look here at the dollar index, you'll notice the dollar index on Friday took a big move down, and I believe it's trading just about exactly. Actually, it's up a few ticks from there, but we took out the highs that we made back in early August by just a few pips. This is either a major double bottom here in the dollar, or it is heading a lot lower. It's still too early to tell, but the fact that it took that out is a very significant thing, to see if that's going to be the case. This we don't know. Of course, we're just looking at probabilities. That's all we're looking at any particular time, when we're watching some of these things. If you remember, we were looking at some of these markets for major support in the currencies on Friday, which in fact we did. You notice that the British pound went down to the 61% retracement and held that level quite well. And the Japanese yen also went down and held its support at that 109 level. However, the Japanese yen is really struggling to hold that 109, folks. We're trading around 109.27 to 30 right now. So that's not a very good sign, because it should have, after that bottom came in a week ago, we've actually gone flat, and that's not a sign from a cycle point that the market is going to rally. You want to be able to see when these cycles hit, they should get a really nice move to the upside, and to keep going like that. One other thing that they're not talking about this, the water that's down there. This is right in the midst of where they do some of this grain shipping, and this could have some effects down the road too on grain shipments. But the markets for grains are not doing anything, so evidently it's not going to be much of a factor at all. That's the bottom line as we're watching here. So I think the key thing to keep in mind today is the fact that we're over some major cyclical stuff in the stock market that should act like a magnet, pulling it down. Whether it does that or not, remains to be seen. That's just what the charts are saying, and it's also what the Bradley model is trying to emphasize too. But it's still really early in the week, of course, and but it's going to be an active week. I don't think there's any question about it. That's the key thing, to pay very, very close attention to. And also the breakout in the gold. I'm not following this breakout. I'm following the action, of course, but I am not buying the gold here. The best time to buy it was Friday when we had that 78% pullback, down $20. And of course, you had to be, very patient within that first 10 minutes to buy it, or off to the races, because it took it back right quickly. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to remind you that if you do have some goodness in your heart and a few extra shekels, pick out a church down in Houston and try to get a donation. I believe going to the private churches down there is better than to going with the major fundraising people like, well, you know who they are, but I think that's the best way to do it. I've felt during Katrina that worked well, but we'll see. Anyway, let's take a look at these markets here. Like I mentioned before, there's a great deal of bearishness overhanging these markets as far as what the patterns look like, particularly the fact of the number of stocks that have been going down versus the number of stocks that are going up. The other thing is the fact that the crude oil and the gasoline are not acting really strongly considering the major news announcement of this storm. So whenever a market does not react to good news, it usually means that it's going to react to bad news. So just watch it because it's very important. The other thing that we've talked about here this morning is the gold market. We're heading towards, it looks like 1309 to 1322, 1322 on the weekly basis. Wow. Sorry, folks, for these mistakes and numbers. I've just got it all backwards today. I'm not dyslexic. I'm just getting it wrong. 1922. Wow, I did it right. I was right. It was 1322. 1322 is the 78% retracement from the high we made a year and a half ago. So watch that number very closely. There's a big ABCD structure at that point. So that's one that I'm looking at. The other one that I think is extremely important, and that is if the stocks do weaken, the bonds should get up to 159, 158 3/4 to 159, and that'll be a 3-drive pattern. That'll be this, sometime maybe during this week if it does work out that way. But that's what I would be watching. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.